Good evening, good morning to everyone that's here. Welcome to the stream. Now, we want to do a couple of things today. I think the main thing I want to do in the stream today is to actually speak about SOFi. But I also want to show you what I've done with a couple of the positions in the portfolio. Good morning to those of you in the US, and good evening or good night to those of you in Singapore. Just give me a minute. I literally just got home. And I rushed on here. So give me a minute. Just get everything set up. Good evening. Okay, so today I want to start by going through some of the moves I've made in the portfolio. Now, the reason for some of these moves is that because I'm going to be quite busy over the next couple of days preparing content to be posted when I'm away, and at the same time, I think a lot of the options are expiring next Friday. So I kind of moved some things around. And then you'll see where the portfolio position ends up today. So we're up quite decently. I think yesterday we ended at like 640, the portfolio. Today it's back up at 660. I'm still not too sure how I can actually zoom this to make this a bit more optimal for you guys to see. So I hope you guys are able to see this. Hi KP. Well, I don't think, hi useful idiot. Hi Russell. Hi Philip. Yeah, definitely picked a good day for the stock price. So a couple of things I want to show you, and perhaps one of the things I can do live here. Yesterday we were talking about so I'll go down in order before we. Hi Paul. Hi Cosma. I hope I'm pronouncing your name correct. Yeah, so I just want to go down the list in order, and then we'll talk about some of the changes we have made. So the first company you can see over here was I was trying to be a little bit greedy and premium grab a little bit of Lulu back when it was in the $200 range. So I sold a cash account put at $190, received $8.64. So the average cost here is around $181. And like I was saying, I have two options. The first one is to basically let these options expire and then likely to be assigned the shares at 190 and to see where the stock price is. So what I have been looking at is that even if Lulu ends up at still stays around the high 160s, if you look at the options chain over here, I'm really sorry, I don't think I can zoom this in very clearly. But if you look at the option chain, and even if I want to be very aggressive, I'm going to be away until 4th of October. So let's say I sell 10th of October calls 1 month out. Even at 175, I'm getting 450. So that means I'm actually bringing my cost price further down from 181 all the way down to around $177. And so by that point, even if the shares get caught away at 175, I'm just making around I'm just realizing a $200 loss. And the reason why I'm thinking about that is that honestly, for me, Lululemon is really just a trade. And I'm just worried that between now and then, if the market shows some volatility, I want to be able to unlock this capital in the quickest way possible to actually deploy some of this cash. So that's the first position that we have. Got into it because I was a little bit premium greedy, but yeah. And I thought the earnings would be bad, but not that bad, okay? But like I said, if you follow my analysis on Lululemon, that if you believe in the Asia growth, which I actually do, then long-term, this is a good hold. But although the management has told us that they're going to have a larger refresh cycle in 2026 with up to 35% of their goods being refreshed next year, you see, one of the things I really pay attention to is how often the management can deliver on what they said. and they have tried this whole, we are trying to refresh our refresh our product line before. Wasn't as successful. They misread the consumer because of the type of colors that they launched. They told us that consumers like the style, dislike the color. Will there be any more of these missteps? I'm not very sure. And so because of that, I'm a little bit more tentative on this position. Now you can see Hims over here. I closed out my position. I'm going to show you later. I'll show you the Excel file to summarize everything. Let me just show you the portfolio. So basically, I closed out my call on Hims. I think I've spoken about that yesterday. I even had, and then in the end, I sold 5 cash secured puts on Hims. This you can see expires 10th of October. Again, I chose 10th is because I'm back on the 4th, right? So these were about $1.79. So 5 of them, you get about close to $1,000, $800 over dollars, for a month. So that's not too bad. Yes, it is going to be about SOFi, but at the start of every stream, I like to talk about the portfolio because people have been asking me about how I view options. And one of the things I'm going to do before I hop into the commentary around SOFi is basically talking about what I'm going to do regarding SOFi's options. That's the first thing. And then what we are aiming to do for the rest of this stream is to build out the valuations on SOFi based on what Anthony Noto has said during the Goldman Sachs interview. Right, so just bear with me for 5 to 10 minutes. If you are just solely for SOFi, there are a couple of people previously have been asking me about how I manage the portfolio. Now, UNH, no problems over here. You can see this is close to $60. Grab, I don't really run options strategies on Grab because of the lack of liquidity. BMNR, you can see that we have, this is a very aggressive. So basically yesterday I closed out all my $44 calls, and then basically what I did was that I sold 10 cash secured puts at 46, and then I consolidated this position into 5 covered calls on 19th of September, $53 at basically at $1.43. So basically you can see over here the whole position, if I consolidate it, it's up $1.8 thousand. So to me, the way I see it is because the average price of my BMNR is around 45. So the way I see these shares get called away, right? I am making around $4,000. You add the premium, it's around $5,000 on a $24,000 investment, right? We've had less than $24,000, right? It's $22,000 investment. That's nearly a 20% return in a week. So I'm not going to be complaining. And then what I'm going to do, like I said yesterday, I'm going to treat this position like a very aggressive build strategy. It's going to be somewhere between 50 to 70,000. That is my limit. And then I'm trying to generate around 3-4% returns every single month. And I want to see whether that's possible. With the current liquidity, it seems like it is, but then you just have to understand the dynamics of the build strategy, right? So that's how I'm doing this. And then with SOFi, yesterday, I closed out my $29 calls quite profitably. Later, I'll show it to you. But basically, the reason why I did that was because entering into the rate cuts, I was pretty sure that SOFi is going to continue going up. So I wanted to roll my calls even further out, probably to the $30, $31 range. And then that's where I might at least start to trim about maybe 10-20% of the position, because once I usually achieve a 3 to 4x, that's when I start trimming around 20% of the position to start to take profits, right? And then Oscar Health, there's no changes over here. So very quickly, since SOFi is up around 2.6% today, if I go all the way out to 10th of October, so hopefully I don't have to bother about this, $30 calls are 55 cents. So 55 cents on, let's see, 55 cents, $30. That's only a 1.8% return. It's not that fantastic. So I think this was the same thing that I experienced yesterday. I think because there's no big moves in the stock. So yeah, so in the end, what I might have to do with SOFi is to do something more shorter term and then to adjust it in the middle of, so 20 September. I might do 26 September and then we will go from there. Okay, so with that, let's dive into the stream proper, because today I want to talk about SOFi's call. So I actually prepared some slides so it's easier to talk through, because previously I was just scrolling through Fiscal AI, and I realized that when you scroll through Fiscal AI, at least on screen, it can be quite hard for the people watching to follow. So I have downloaded the PDF. Where is it? And then so let me share this with you. So in the past, what I've always done is that I've tend to pre-prepare my videos, right? And then I do the normal recording. But I think what I've enjoyed about live streaming is that people get to ask me questions. You get to actually see me build out the whole valuation, right? But of course, thereafter, I've also gotten some help to basically cut some of these live stream into smaller bite-sized videos that I'll be posting on a regular basis. So that's what's going to be you can expect going forward. So of course, if there's any big events like SOFi's earnings and things like that where I have to do a dedicated video, that's what I'll be doing. However, I think by and large on the week-to-week basis, I'll be doing live streams, looking at the valuations, editing it on the spot. You guys can feel free to ask me questions. And later on in the week, maybe 3 to 5 days later, I'll be reposting or repurposing this live stream into a shorter videos for those of you who can't catch the full thing. So that's going to be the plan for the channel moving forward, and we'll be covering quite a few companies. All right, so let's dive into the SOFi's, basically Anthony Noto's talk on Goldman Sachs. And the second thing I want to talk about is basically Galileo releasing this paper on how they can actually help financial institutions and larger banks actually lower their customer acquisition costs and the whole purpose about their tech platform. Where is my file? SOFi stream. It's called SOFi stream. All right. PDFs. Okay. So I'm not too sure how many of you actually caught Anthony Noto on when he was speaking at Goldman Sachs. Give me a minute. Yeah, just this. Right. All right. So in this whole, basically, hi Kwa, good morning, good evening. Where you're from Taiwan, am I right? Are you from Taiwan? Were you the one from Taiwan? I can't remember. If you are, good night. Similar to Singapore. Because I remember this name, but I can't remember where you spoke to me before. So basically, I'm going to be covering what Anthony Noto. Oh, you're from the USA. Okay. No, there was someone with a very similar name to you popping by and then telling me they're from Taiwan. Oh, wow. So it's morning for you now. All right. So in today's stream, it's going to be quite straightforward. We are going to be looking at what Anthony Noto has spoken about during his interview with Goldman Sachs, because he has actually given us some nuggets that we can use in our valuations, particularly regarding member growth, regarding products that to be expected, about how they plan to cross-sell with their to their existing members. And at the same time, we can also see how this affects their monetization and their plans for monetization moving forward. Right. So I think he started off by talking about, assessing SOFi by the rule of 40, and they have a rule of 40 of over 50 for, I think, the last 16 quarters. Is it 16? Yeah, for the last 16 quarters. And so I think rule of 40 usually, like I said, from what I have known previously, rule of 40 tends to be used to assess software companies. And I think that's where they're trying to position themselves. And I think because Robinhood is doing that, they're trying to do the same thing as well. Hi, Fantasticals. Whoa, from Germany. Nice. Oh, Germany is a beautiful place at this time of the year, because I was just there last year. I drove from Germany all the way down to Grindelwald. Do I think SOFi will breach 32 by 10:10? I have sold calls there. Huh. That's quite an interesting. I mean, like I said, I really have no idea. I might sell calls around. I'm looking at around the $30, $31 area, 32. Yeah. I don't know. I think it really depends on the market person. Yesterday, we had a softer PPI, and I expected SOFi to do well, because softer, yeah. With softer PPI, I thought that it would mean that there wouldn't be, a need to keep rates so high. But SOFi went down. And then today, with a hotter CPI, I took a look at the report on the way back. I think a lot of it was driven by shelter inflation. SOFi is up nearly 3% today. So it's a bit hard to say how they will react when the Fed cuts. For me personally, I have around 11,000 shares. So I am looking to perhaps offload. I actually had 12,000 shares initially, and I tend to trim around maybe 10 to 20% of my position every time a company that I hold 3 to 4x's. It's basically just profit taking for me. So I do plan to sell some covered calls on the position, not the entirety of the position, around $30, $31. So actually lower. I would likely be lower than you in terms of the strike price. But yes, I'll let the rest of the 10,000 shares run all the way to, for how until the thesis changes. But I agree with letting the winners run, because this was a lesson I've learned. Quite a painful way, because I cut I think I cut a lot of my Palantir in the $75 to $100 range. So, hasn't worked out that well. Okay, so like I said, Anthony Noto started off in this whole interview with Goldman Sachs talking about how SOFi has achieved over 50 points in terms of the rule of 40 for the last 16 quarters. And this is largely driven by, the two metrics that I like to speak about when I cover SOFi's valuation, and that is product growth as well as member growth. Now, both of these numbers he expects to grow at least 30% for the foreseeable future. And the thing about Anthony Noto and SOFi is that when they give these kind of guidance, what actually happens is that they tend to use very conservative numbers. They tell us that they are going to guide 30% of member growth as well as product growth. But later on, he's going to say something else regarding member and product growth that contradicts this 30% narrative, that shows that perhaps product growth especially is something that can grow even further. So the way that he plans to do this, after achieving all this member growth and product growth, and to continue growing this revenue and to achieving a rule of 40 of over 50, the first thing he plans to do basically is to roll out different ways to monetize the existing member base, and one of the ways to do it is SOFi Pay. So I think he's telling us that this will start, by offering customers the ability to send US dollars to foreign countries through a Bitcoin network and then back into fiat back end. So over time, you do that through a SOFi stablecoin. Now, I think if you listen to what he has said during the interview, he seems to have hinted that this is possible before the end of 2025. And I think this is going to be something that really drives up adoption, an increase in cross-sell of SOFi's products per member. Because if you have followed the valuation process with us along the way, what you would realize is that SOFi's products per member have been stuck at around 1.46 for the last couple of quarters, and I'm expecting this to go up as they ramp up their crypto and AI initiatives over here. So that's how he started. He's giving us the context. We want to drive member growth, product growth at 30%, and monetize the existing member base. One of the ways we are planning to do that is through SOFi Pay. So on top of SOFi Pay, another reason why he is confident of the ability to monetize existing and even new members is that because when they survey their existing members, over 50% of them would invest in cryptocurrencies through SOFi's platform, and more than 60% of the people that are non-members want to do it with a licensed national bank. So the caveat over here, I think 50% of their members who wants to do it, that is actually quite bullish, because right now they have around 12 million members on the platform. So with 50% wanting to take up crypto on the SOFi Invest site, that could easily lead to somewhere between 3 to 6 million new products on crypto on SOFi Invest. Now, why did I say 3 to 6 million and not just take the 6 million? I would say that because 6 million is assuming that all of the 50% don't currently have SOFi Invest set up. They're only using SOFi as their bank, and then they are only going to set up SOFi Invest once the ability to buy, sell, and hold crypto exists. And I don't think that's the case. I think a lot of SOFi members should be using SOFi Invest as well. It's just that they are keen to actually move their cryptocurrencies over into SOFi's platform once that is being allowed. So for me, how I see this is that perhaps anywhere between 30 to 50% of this number of the entire 6 million members that are keen to move their cryptocurrencies over would have to open up basically a SOFi Invest account, and that will add around perhaps 2 to 3 million new products more than what they would usually do every single quarter the moment they allow their existing users to buy, sell, and hold cryptocurrencies. So by adjusting just this extra accounting for this extra perhaps 2 million new SOFi Invest users, what is going to happen is that it really is going to drive up the level of adoption of products, and that will increase the products per member number. And at the end of the day, that will basically cause an increase in revenue from the way that we do our valuation. So later on, I'll take you through the Excel spreadsheet. In the past, what I've done is that I've always screenshotted the spread and then, spoken over the screenshot. So what I'm going to do is that right now I'm going to do it live in front of you. You can ask me how I make certain changes, and you can see how I basically work with the spreadsheet over here. Now, on top of that, he also said that with SOFi Plus in January of 2025, they launched it, and then now they're actually seeing quite a broad range of subscriptions to SOFi Plus through their existing members. And out of this 90% of the SOFi Plus members, basically 75% of them are actually taking on another product after they open SOFi Plus. Now, speaking in percentages, of course, this seems very nice, but I think from what we can see based on their product growth over the last couple of quarters, the results haven't been that substantial in the sense that they haven't grown product faster than they usually have. So I think what that would mean is that, because this rollout of SOFi Plus is still fairly new, it is a little bit hard to judge how this is going to change the trajectory of product adoption. However, I do believe that the way that SOFi is operating, it's not just solely dependent on one particular lever. They are pulling on quite a number of levers at the same time, and then eventually all of these together will basically cause the product adoption number to start to come up. Let winners run. Just right call, month out, 15% out of the money. Yeah. So that's why right now they're around, SOFi is around $26. So I'm planning to do about 20% out of the money, around $30, and then let's see what happens from there. I think that my only concern is that SOFi runs after the Federal Reserve cut rates, which is basically my concern, which is why this month I might tier my covered calls so that I sell maybe 2,000 shares worth of covered calls at $30, and then the rest further out the money at 32, because I don't really want to sell SOFi anytime soon. Later on, you're going to see the valuation process and the new valuation that I have for SOFi for 2025, perhaps even 2026 a little bit. So with crypto, I think there's a number of things that that Anthony Noto has planned to do with crypto. And I think this is something that you can really see from the way he speaks, that he really has this in-depth understanding of crypto, and it's not just something he uses as a gimmick to entice people to use their platform. They really want to allow their users to interact with crypto in a way that affects their financial health in terms of payment capabilities, and they're also planning to do things like crypto-backed lending, asset-backed lending using crypto. And I think all of this, when they build out these capabilities for themselves, I think what is important thereafter is that they are building all of these on Galileo's technology. Because later on, I'll be sharing with you this article written by Galileo about their platform, about their capabilities and what they can offer to other people. And I think that as Galileo helps SOFi to build out their crypto offering, I do believe that this is something that is going to be able to help them better serve existing customers. And with the large part of fintech, or the large part of Wall Street looking to tokenize themselves onto the Ethereum, I think this is something that is definitely going to act as a growth driver for their tech platform going forward, right? So I think as you guys know, I think even up to today, I'm still cautiously optimistic about the tech platform. I think that's what I would say. I'm cautiously optimistic about the tech platform because, despite all the bullishness around the tech platform about, wanting to be the AWS of fintech, that has kind of petered out over the last couple of quarters because of the results of the tech platform. Even now, you can actually see that Anthony Noto has said that, we are still waiting for some of the bigger institutions to move. They need to decide to move right now because it is already too late. But that kind of the narrative all the time, and I'm glad to actually see them or see Anthony Noto speak about moving into different areas of using the tech platform to serve different kinds of customers, and then we are going to see how that affects their tech platform revenue. Because as you know, even though they have off-boarded Chime of their tech platform, their revenue per account is actually growing. right? So it's not all bearish for the tech platform as well. So like I said, cautiously optimistic over here. Okay, so let's see. Yep, so far up to here, is there any questions before I carry on? And I think the whole idea of crypto stablecoin, a SOFi stablecoin, integrating it with SOFi Pay will be relatively bullish for the company, because I think his plan over here is that if merchants and consumers actually use SOFi Pay to carry out their payments, then it puts SOFi in a position where they can actually offer certain rewards and certain perks to the merchants that perhaps other companies are not offering, right? So I think because of that, for example, with remittances, I know certain banks charge a small fee when you transfer money between countries and things like that. But with stablecoin, that is completely wiped out. It's faster, it's cheaper, and it's more transparent than using Swift or Western Union. So I think if merchants are allowed to accept SOFi stablecoin directly, I believe that the fees on these stablecoins are pretty much negligible. So this is comparing to what merchants are having to deal with now, the 2 to 3% fees that they have to pay to like Visa and MasterCard. And so not only do they save on the fees, they can actually incentivize these merchants by passing back some of the savings to them, or create some sort of loyalty program that keeps the merchants on their platform, and it makes them even more sticky than some of existing products out there, right? So yep, so this is what I was saying, right? SOFi stablecoin is going to be. And then the next thing on top of the stablecoin narrative is the whole idea that I think this is something that has been debated within the SOFi community or on FinTweet in general for quite some time, about whether or not SOFi's banking license is actually holding them back. And so Anthony Noto has basically told us that, hey, look, we have gone through the hard way to get all the necessary license. And right now, because the OCC has changed their stance around crypto, we are able to offer you crypto in a way that not many other companies can, because we already did the hard work early on. We laid the groundwork for getting all of these like banking licenses. And so because of that, I really do think that now the banking license, initially this was seen as something that is bad, something that is, perhaps holding SOFi's multiple down during the period of time when their stock was trending around the $8-10 range. However, now it becomes something of a moat for them, because people see them as a nationally chartered bank, and then you offer crypto on top of that. People tend to trust you even more because you are a nationally chartered bank. So, like for instance, in Singapore, I think Binance is actually quite a popular platform to custody your crypto, or to use as a brokerage for your crypto in Singapore. However, the Singapore Monetary Authority basically didn't give their stamp of approval to Binance for some reason. And because of that, I know many people who actually choose to use other platforms like crypto.com and things like that, who are basically backed by the MAS. So I would think that there might be similar impacts of certain people being a little bit more skeptical of custodying your crypto somewhere else, and people feel more safe, especially people in the older generation, they feel more safe custodying their crypto with a nationally chartered bank. So I don't know if that is going to be the case in the US, or people over in the US are open to these kind of newer fintechs. However, at least I know in Singapore, the older generations tend to be a little bit more skeptical. And so some of the older people that I know that hold crypto, if they are given an option to hold it in a brokerage account that is basically backed by the Monetary Authority of Singapore, MAS, and that is what they will likely like to do, right? Despite the slightly higher fees and things like that. Okay, so the next thing he spoke about, apart from their entry into crypto and stable coins and how that can work within SOFi's ecosystem through things like SOFi Pay and how they can offer reward programs to merchants, he also touched about their loan platform. This is not new to us by now, right? It's capital light, it is low risk, and it helps them to reach out to a broader base of members which they otherwise wouldn't have had the chance to reach out to because of the credit profiles, right? SOFi only targets people in a certain credit box, which makes their target audience fairly narrow. But at the same time, that doesn't mean that they do not want to serve members outside of that credit box. And so previously, they were not able to target all of these members through basically through their lending program. However, with the loan platform business, now if they are able to originate loans on behalf of third parties and then don't take the risk by holding the loans on their balance sheet and basically giving the loans to these third parties and just receiving a fee. However, the servicing and things like that are going to be done by SOFi. That basically adds a new member into the SOFi ecosystem without SOFi having to take on any balance sheet risk. Because at the start for SOFi, when they first started, right, I think one of the main concerns was balance sheet risk and how they're going to be able to continue keep up this pace of growth if their balance sheet is basically saturated. So outside of their credit box, SOFi declines $100 billion worth of loan applicants every year. And currently, they announced that it's only in the last 1 to 2 quarters that they start to underwrite of these loans that are outside of their credit box and selling them off to their partners. And so because of that, you can actually see just within SOFi's ecosystem, loans that come onto their table in a sense, and they reject. You can always see $100 billion of originations in terms of potential over there. Even if they don't get the full $100 billion, even if they get 5, 10, 15% of this is still an additional $10 to $15 billion worth of originations. And I think that is only going to be bullish for the company if you assume that they can maintain their 4 to 4.5% take rate on all of these loan originations. I've not traded options, see others doing cash account puts to earn regular cash without much risk. I mean, okay, I'll be very frank. I was fairly new to, when I first started trading options, everybody is saying that there are all these approach to options that have no risk. And I think it's really about how you define risk. Even cash account puts have risk. I mean, look at my Lululemon. That is the perfect example of risk in the cash account put. I'm comfortable buying Lululemon in the 190s. I'm comfortable buying Lululemon in 190s, 180s, in that range. So I have no problem getting a sign over there. But the fact of the matter is that if I get a sign at the current prices in 160, I'm still down. And then the concern that, because people make it sound very easy. You sell a cash account put. If you get a sign, you just sell a covered call. That only works if the stock trades within a certain range. I think one of the main concerns that I had when I first started learning how to trade cash account put is that if I choose a strike and something happens, like in this case Lululemon, right? They're slow, they headed for even lower next couple of quarters, stock falls more than you expect. Right now, if I sell a covered call, I have to sell a covered call to make the premiums worth it somewhere in the 170s, in the $170 range. And actually my average for Lululemon is in the 180s. And so because of that, you're actually inherently losing money. You need to be, you basically need to be a little bit more intentional over the next couple of weeks as you roll yourself out of that position. That means increasing your strike. So it's not without much risk. It is, if you already plan to own the shares, then definitely, if you can't beat yourself up. The psychological impact of beating yourself up over, I could have bought Lululemon lower. You can't really do that to yourself. It's a risk that you have to accept. So I wouldn't say that there's always risk in options. People that say that there's no risk are just not fully understanding the whole strategy. Or they have this mindset that I want to buy Lulu at 190. So being assigned at 160 to me doesn't really matter if they have a long-term time horizon. But I think that initially threw me off when I first started doing options. It caused me to make some stupid mistakes. So now anyone that asks me about options, I'm very clear in saying that there's always an inherent risk over there. And the risk is actually losing money. And of course, if you're going to say in the long term, then it doesn't matter. Really, anything you do can be easily covered by that blanketed statement. If you have a long enough time horizon, there's no risk. But I am telling you that there is a risk because it's not so easy to roll out of a position that has fallen so drastically. So that is the main risk of the cash account put. But if you have enough cash on hand and you like the position, then like SOFi, then there's really not much risk in that sense, right? But not because there's no risk. Okay, so if you like the position, if you have cash on hand, fine. But I can understand why people say that there's no risk, but there's definitely a possibility that you are not able to exit the options position profitably in the short term. Samir says he just buys shares. I mean, yeah. So for me, in my parents' account, I just buy shares for them. Occasionally, I think the only position in their account that I run an option strategy on is for end phase because I want to roll out of that eventually, right? But yeah, apart from that, I just buy shares, so I don't have to bother with that account. That's the Mumu account that you guys are seeing. So with the loan platform, right now, I think what I want to point out is that just with a single partner, they are able to produce $2 billion worth of loan originations for one partner and $5 billion. So that $7 billion basically makes up the bulk of their loan originations. And this is actually very intentionally a strategy that they do. Now, one of the things that, you see, the good thing about SOFi is that there are so many verticals of business. If this was the only vertical, or this is like Upstart, if they're like Upstart where their business is very narrow, then this would be a concern because this was the exact problem that Upstart have. You don't want to have so many partners such that there's a lot of volatility in your revenue during tough economic times. Anthony Noto said that himself. We want to know that you can see over here, we are picking partners that we know are able to sustain their asset management business, that have capital to continue to invest in this over time. So this was basically in response to a question of what's going to happen in economic downturn. He says that we are very particular about our customers, and you can see they have actually big customers. Now, for a company like Upstart, because this is their only source of revenue, if you have one customer accounting for the bulk of your loan originations, then this is going to be, customer concentration. But because this is just one part of SOFi's financial services platform, to me, it is perfectly fine for them to have a small number customers that are very concentrated over here. So I don't feel that this is something to be concerned about. I actually think that this is actually a good thing for SOFi, that they are in it for the long haul with some of these partners, and they have this understanding that, hey, you know what, even in tough times, we're going to continue to invest, perhaps at a slower rate, but this relationship is something that we want to build in the long term. So this is something that, because of the magnitude of SOFi's business compared to something like Upstart, they have the luxury, let's put it this way, luxury to go out and make these concentrated deals with one or two particular clients. In this case, we know it's Fortress and Blue Owl, that that they can really develop this long-term relationship with, and they can be certain in terms of the economic downturn, what will be the impact of their revenue. And I think because of this, it makes their business a lot more robust, because they are going to be able to tell you, hey, my partner has agreed to originate this amount of loans, and then this is how we're going to adjust our revenue. So even in an economic downturn, they will be able to guide quite accurately in terms of what to expect. And I think with that kind of certainty is a moat that not many companies have. So that's how I see it, the loan platform business. So moving on from that, I think what is interesting over here is that Anthony Noto sees the possibility of an M&A in the AI space. And I think this is, in particular, have to do with, basically protecting their member base in terms of customer service, as well as in terms of fraud detection and protection and things like that. So over here, he says that if we have scaled deposits to almost $30 billion the way we had over the last 8 years, scale our member base close to 12 million members at the end of last quarter, you also drive up fraud, which is what they say, right? And then you drive up account takeovers, you drive up disputes. And this is what basically they hope to do. They hope to basically drive efficiencies within the business using AI. And I think it's quite interesting because I think a lot of us expected them to make a crypto purchase. I think data-driven investing has said that. Tanner has said that. I mean, I've also been on record to say that I think there was a X post that I shared, right, that they could be making a couple of crypto investments. However, I find that, on hindsight, it does make sense because they already own Galileo, and it would make perfect sense for them to want to build out their own crypto infrastructure and license it out to other people eventually, and to actually focus on other areas of the business. So basically what he's saying is that, they are entering into this phase of SOFi's business, having to, drive up the protection of their customer, to fraud detection and things like that. I think it puts them in a position where they're starting to see people invest in the second order effects of their company. So second order effects is basically, SOFi is the primary business, and what are things that are additive to SOFi's business that, people can invest in and benefit from SOFi growth, right? So what he says over here, now the entire investment community is doing that, it gives us a great opportunity to buy one or two Okay, one or two. I think it's quite interesting that he says one or two. He doesn't buy a company, buy one or two. So that means there are a couple of options that they are looking at. Put them into our tech platform business. Again, interesting, adding more arms or more verticals to their tech platform and what they can offer to people. And then bring that to the masses in terms of all the fintech competition. So, oh, not fintech competition, bring that to the masses in terms of all the other fintech companies and financial institutions. So I think this is definitely bullish for SOFi going forward, because I really do think that the tech platform is being underestimated. Like I said, cautiously optimistic. I think there was a period of time where I was fairly skeptical about the tech platform. But I think I see the way that they build out SOFi's business, right? It's very different from, it's a very different culture. I think you can tell from what a company like Robinhood is doing, right? Robinhood is like the move fast, break things, and then, we'll repair them later. Whereas SOFi is a lot more methodical, it's a lot more measured. And I think that is why I would feel a lot, actually, I actually feel a lot more comfortable having I would have greater gains today if 40% of my portfolio is in Robinhood instead of SOFi. However, I would sleep better knowing that 40% of my portfolio is in SOFi compared to Robinhood because of the nature of the business, right? So I think personally, I see this as, basically part of their culture at this point in time. They're building things from the ground up, and they're not in a, I wouldn't say that they're not in a rush, but they have their own timeline, and I think they're keeping to that. So, okay, so basically so these two slides were talking about the same thing. So basically, moving on from that, I think towards the end, he was speaking about the tech platform, which later will transition very nicely into the article written by Galileo. The deals we announced for the next year in January were important wins for us. So previously, he said that they were in negotiations. Now he said that the deals that we announced. So I'm guessing that all 10 of these deals were closed, right? Which means 10 new customers that will start generating revenue for the tech platform in January, which means we should see a bigger boost in the accounts on the tech platform as well as the earnings from the tech platform. We just recently launched one of those, and we have work to do. So the business has been through a couple of cycles, and so this is basically things that we have heard of before. So the most important element in that business is getting the third party or counterparties and partners to make the decisions on the investments they're going to make. So here, speaking about in relation to the big banks, but thankfully right now, despite the big banks not making such investments, SOFi themselves are finding other ways to monetize their tech platform and to help other companies that are outside of the financial services aspect of the industry, right? So one of the things, and I think over here, I know people have mentioned this before, but I just want to give my quick take on this. The fact that level 1 options is only coming at the end of this year. And I think this statement itself just made me realize that, Robinhood and SOFi are not really in competition. Because the typical Robinhood customer is someone who is perhaps a lot more in tune with markets in general, and because of that, it is unthinkable that a Robinhood customer would be okay with a platform without level 1 options. And the fact that SOFi is able to delay level for so long while still growing members, it shows you that they are basically reaching to two different parts of the markets, because the financial market is so big. And the fact that they're only rolling it out now, basically tells you that perhaps this is not something that is really in high demand from their customer base. I think at the start when he first said it, people were skeptical, but the fact of the matter is that after saying that, you're seeing that they're still growing members at over 30% year over year. So you can't dispute that if this was really a problem for the members on their platform, then you wouldn't see such fast member growth. So that's the first thing. And the second thing is, I do realize that there are really two different groups of people. I think for me, I even feel it for myself in Singapore. Sometimes I think certain news, everybody already know. There are certain news that comes out, or certain features and certain little investment strategies and things like that. I just tend this, I think a default that because I know, everybody else should know as well. And I think because all of us are in this whole ecosystem of FinTweet and financial YouTube on financial YouTube, it seems like it comes across as, very, it comes across almost as second nature to us. Is that a lot of my friends who are working professionals, they're engineers, they're working in government roles and things like that, they don't think about investments at all. They probably have something that their parents set up for them a while back, and then that's about it. So I think, yeah, and they don't know what each investment tool is supposed to be used for. So recently, one of my friends actually, and this basically came just the day before this SOFi talk on X. Oh yes, data-driven investing. I've spoken to him a couple of times before because I used some of his articles in my video. So I actually DM'd him to ask whether it's okay I screenshot his articles for my video. So I've spoken to him before. Yes, I'm aware of him. Yeah. So I do know that SOFi is not correlated with Robinhood. I'm just putting it out there because because of a couple of experiences that I've had recently. Like some of my friends who I thought were a little bit more in tune with the markets, they were still asking me, should I buy this index called the STI? So the STI is basically the Straits Times Index which is basically Singapore's own index. And if you look at the index, to me, I thought it's quite common knowledge that if you bought the Singapore index in 2007, just before the great financial crisis, you only broke even, I think, end of 2024. It took 17 years for it to break even, compared to buying the S&P 500. That's not to say because Singapore is not growing, but because Singapore's strategy is fundamentally different from the US. US invests very heavily in growth and innovation, whereas Singapore wants to position itself as this very stable and dependable nation that people can do business with. So because of that, we don't see as explosive growth in Singapore. And to me, this should be, I thought, common knowledge, but it is not apparently to people out there. And I think, what did you miss? Well, at the start, I spoke about how I've been moving options positions in my portfolio, and then I've basically been covering Anthony Noto's conversation with Goldman Sachs. Then after this, I'm going to be using some of the tidbits that Anthony Noto has told us to change how I do SOFi's valuation. But right now, I'm talking about the fact that, I think people are always concerned that Robinhood and SOFi are competing. I mean, recently, just a couple of days ago during the Robinhood event, they basically threw a jab at SOFi by, short, in a sense, shorting, so showing the example of shorting SOFi on their app. And I think it's probably not all, at least to them, probably all in good humor. And I think sometimes being in FinTweet, being in financial YouTube, we have this biased understanding that, all this should be common knowledge, but it's really not. And SOFi should be rolling out level 1 options, but the management knows based on the evidence of their member growth and based on the fact that they're only rolling it out now, that whatever they have been telling us that, hey, you know what, our members don't really need this product, this has been shown to be true, right? So like I said, SOFi's management is dependable, it is very stable, they are going for growth, but, perhaps not the kind that, Robinhood, or is applying it using a different strategy than what Robinhood is doing. Okay, so this is the article that I was talking about, Financial Services Growth Engine Playbook, written by, it's basically an article by Galileo. And I think I found this a couple of weeks back when I was in the midst of, moving into my new place. And I think this ties in very nicely with how Anthony Noto ended that conversation with Goldman Sachs. So basically, the whole idea over here that they're pitching to some of the bigger financial institutions is that it's beyond the time where you should have integrated a more modernized banking core into your system. It helps to, reduce cost of customer acquisitions. It allows you to identify the right customer for your business, and it makes you a lot more engaging, allows you, better retention of your customers. So that's basically the three things that they're selling to the banks. Now, the digital banking market is projected to be worth $26.5 billion by 2032. Now, right now, within SOFi's tech platform, they are only generating around maybe $400 to $500 in terms of revenue. $4 to $500 million in revenue, right? Which means that they are barely scratching the top of the surface right now. And I do think that this is really going to be something that is underestimated by the markets, perhaps even by some of us who have been in SOFi for quite some time. And I do think that this thesis will eventually play out, but not at the timeline we expect. I think a lot of us expected this narrative of, the AWS of fintech to play out by 26, 27, because that was when Anthony Noto and his team had all these options, expiring, where they were due certain payments at certain price points, and we thought this was going to drive growth. But what Anthony Noto and his team has showed us is that we don't even need this tech platform to reach those targets. And I believe the next stage of SOFi's growth after setting up the financial aspect will be to drive the tech adoption over here. BMNR to 75, SOFi to 32 this year. Well, it makes two of us. I hope that happens as well. Okay, so apart from that, they tell us that, when you use our banking call, we are able to lower your cost of customer acquisition to 44% compared to a non-digital customer acquisition, right? So we can actually see, I think I've compared this a couple of times before, for the typical legacy institutions, right? I think I used JP Morgan as the comparison in one of my videos previously. You can see that their customer acquisition cost hovers around the $600, perhaps north of $600 per customer range. Now, SOFi may be higher than some other fintechs, which Anthony Noto has already said that, this is actually not a bad thing, because when we acquire an expensive customer, their loans tends to be, their loan performance tends to be better. They tend to be a stickier customer, right? However, so SOFi is, I think, somewhere in between, I would say, a sweet spot, lower than the legacy banks, so they're stealing market share from them, and they're not being overly concerned with lowering their customer acquisition cost to obscene level to get the customer, because they want to have good quality customer, and they're okay paying, $280 to $320 in terms of their customer acquisition costs. So, like I said, everything SOFi does is very measured, it's very methodical. It's not growth at all costs. It is sustainable growth for the long term, because Anthony Noto has said 25% CAGR for decades to come. And I think that's what we really can hold him to. So I think on top of that, like I said, you can see the main users for Galileo and how they can help some of these legacy institutions is to have a basically 15% higher activation rates, 23% higher transaction volume, basically allows more interaction with your consumer as well as your banking services. And then what that does in turn is to actually boost revenue per account. Which is exactly what we track for SOFi. We look at how many members they have, how many products they use, and then the revenue generated by each of these products. And from that's how we get our valuation. And that is, it's good to see that there's alignment between what SOFi is tracking, how they look at their business, and how Galileo is pitching themselves to financial institutions up there. Okay, so I think what you are seeing is that it drives, like I said, this is what I was saying earlier, increases customer engagement and drives up 10 times of the customer lifetime value over the accounts without direct deposit. So with direct deposit, it's even more, right? And I think, to me, looking at this, I think it's quite impressive, for the very simple reason that, because for a lot of these fintechs, I don't think people are going to make some of these fintechs their primary bank account immediately. And what happens is that people tend to test water a little bit with these fintechs, right? They tend to try it out. They want to see how it works and then how it integrates with their lifestyle. And so without having a direct deposit relationship with these customers, if you can 10x my LTV over the customer acquisition cost, and I think that is something that is going to be very beneficial for a lot of these companies out there. Yeah, and okay, so this is basically something else that I saw that they help to power, which is their buy now pay later. This is not something new to us. I don't spend too much time here. And then of course, yesterday we got the price target raised for SOFi from $25 to $29 from Needham, right? So with this, data-driven is very sour with food. Sometimes you won't compare to Palantir, no doubt. Oh yeah, I mean, I did see that certain things, there was a little bit of conflict or friction between the two of them. I'm not too sure whether he's that sour with Hood. I believe he invests in Hood as well, but perhaps like me, I think I was just mentioning yesterday when I was showing the portfolio, I think Hood is one of those companies got away. Like every time they were at a good price point, I just didn't have the capital to do it. And I didn't want to sell SOFi to do it. On hindsight, of course, everything is very easy to say you should have sell SOFi, you should have sell SOFi, but I never ever do hindsight because at that point in time, I made the decision that I thought was best because I knew SOFi could run anytime. I just didn't know that Hood would run before SOFi. That's all. Yeah, and you can't win them all, right? And so, I mean, if you ask me today, when I first saw Robinhood or when I first got interested in Robinhood, it was in the $21, $22 range. So today I would be up 5x. Now with SOFi, I got in at around $8. I'm up around 3x-ish. So yeah, in that sense, I lost out on another 2x. But again, with investing, if you listen to Simon Sinek, this is right. I think he calls it an infinite game, and there's no end. So what do you mean? People who feel like they have lost because they bought SOFi. In a sense, opportunity cost is a real thing. I'm not saying that there's no such thing, but I think for most of us who have been holding this position for a very long time, you know that eventually the market will definitely catch up with the level of performance that SOFi has done. It's just how long it takes. And so within this fixed time frame of the last 2 to 3 years, Robinhood has outperformed SOFi. And if you use that as a gauge, then yeah, but like I said, infinite game. There's no, I think a lot of these pressures we're putting it on ourselves. And I used to be a little bit more active in portfolio management for some of my clients. And I always tell them that, hey, you have your own life, people have their own life, and there's no need for you to become the best investor in the market. You just need to invest at a rate that is suitable for you to fund your lifestyle, and that's it. You don't have to worry about beating or having the best return, things like that. As you beat the market, that is the first condition. How much you beat the market, that really depends on your lifestyle and your risk tolerance. So that's how I look at it. Like I said, could I have, sold SOFi at 8, bought Robinhood at 21 and, be up 5x instead of 3.5x? Yes, of course. But do I regret it? I don't, because at the point in time, with what I know, I knew that SOFi could run at any time. Did I know that Robinhood's run would come first? I didn't. Right? I didn't know. Yeah. And I think one of the reasons why I didn't know, SOFi 45 end of year. Wow, end of year. I hope so. I'm definitely not going to complain. I was thinking more of, June 2026, perhaps, if they're trying to go for their last tranche of their rewards. But RJ, I'm not going to complain if SOFi is 45. I will gladly be wrong because currently, I think my price target for SOFi is closer to around $30. I think that was the last video I posted. Increased slightly today after Anthony Noto told us, not by much. 45 end of the year, I will be, more than happy to be wrong over there. Yeah. But like I said, this is an infinite game. There's no winning, there's no losing. Of course, over a certain time frame, you pick any time frame, any stock can be a winner, any stock can be a loser, right? I think if you saw the debate between Joseph Carlson and Steve, right? Yeah. They had this debate on Costco and Nvidia. I mean, to me, it's not even a debate. It's Nvidia all day long. But if you pick the correct time frames, certain stocks will perform better than others. So, yeah, I don't know whether he's sour on Hood. I know he is invested in Hood. I appreciate both him and Amit. I've actually spoken in the DMs to both of them very long ago. I don't expect them to remember me but yeah, I appreciate both of their insights. And I think that, I'm not disappointed with my perhaps around 3.5x, if I'm not mistaken, close to 3.5x compared to Robinhood's 5x. Yeah. All right. Okay, valuations. Before I get into the valuation, sorry, I just realized because there are a couple of you today that are fairly new, you haven't seen you might not have seen the framework that I use to look at SOFi. Hood's price to sales 26, SOFi is 7 to 8. Yeah, is SOFi still 7 to 8? I thought they were close to 10 at least. No, the last I checked, I can't remember, but yeah, it's still, and I think the reason why Robinhood gets a premium at the moment over SOFi is because of how many things they are doing, and I think Robinhood is a very good, has a very good marketing team. That is for sure. Give me a minute. Let me just. remove this, stop screen, and then I just want to show, because there are 78 people here today, more than usual. So I just want to go through how we look at companies and what made me want to invest in SOFi in the first place. For those of you who were here yesterday, just bear with me for 5 minutes as I look through this framework. So basically, this is a framework. In the past, I have invested in companies like SOFi and Hims. SOFi in the $7 range. I bought Hims in the $17, $18 range, right? And so basically what I did over the last couple of months is to work backwards and to see what I was looking at when I was looking at these companies, how I decided to invest in Hims, how I invested in SOFi as well. So with that, the first thing I look at is the market cap that is in front of the company. Now with SOFi, this is quite straightforward. They are in financial services. They also have the fintech side of the market as well as the banking. So it's three big markets. So in terms of their total addressable market, their total addressable market is more than 10 times of their current revenue. So that's why they are given 2 points over here. This is full 2 points. Now, the projected CAGR for SOFi's markets, that means it's not about SOFi's revenue growth. This is how fast the markets that SOFi are in is going to grow. It's 10 to 20%. Now, the reason for that is that because the fintech market, as well as the digital banking market, is growing relatively quickly. But because the bulk of their business is still in lending, is still in the banking side of the total addressable market, that particular segment of the market is a bit more slow growing, and that pulls down the overall growth of the TAM. So with that, we gave them 1.5. We want their revenue growth to be at least 5% over TAM, which definitely is. They grew at over 44%, 44% this quarter, so no problems over there, right? And business is, relatively easy to understand, at least me, because this is relative. I think some people find banks confusing. I find them, fairly easy to understand, a lot more easy than certain tech companies where you have to understand the tech behind the company. Switching costs, I do think that there is a switching cost, which is why you can see them actually, keep their members. They have a sticky product, especially loans. Loans are sticky products. So you're not going to, it's quite unlikely, that if your loan provider is perfectly fine, you're just paying your loans all along, I think it's very unlikely for you to switch. And then once you have your loans set up with SOFi, your housing loan, your student loans, and things like that, then they already get you into their ecosystem, and then you keep using one product, another product. And next thing you know, you're their customer for a very long time. Network effects, I think this has to do with their underwriting. And as they are able to better underwrite their loans, they're able to command an even larger premium, because this is what Chris Lapointe has told us during their most recent earnings call, that because of the pricing tension, that they were able to drive a higher rate for loan platform business. Low cost advantage, they do have that because they own their own tech stack and they save costs on that, right? Economies of scale, yes, they do. As they get larger and larger, this will continue to become bigger and bigger. Vertical integration, to me, this is a clear and defensible mode. The reason for that is that because they are the only financial institution that I know of that owns their own tech stack that is currently, of their size, right? I don't believe any other owns that. Now, I know Chime is trying to build out their own, but they're still relatively new compared to the market, at least relative to SOFi, and they're at a smaller scale. In terms of capital and scale over here, I think this is not super relevant in a sense because, there's, I think capital and scale over here tends to refer to physical assets that is very hard for a competitor to replicate. But now anybody can, I wouldn't say anybody. There are so many financial institutions out there. There are so many fintechs out there that no one really has a particular capital advantage. This capital and scale advantage is more like with Amazon. Interesting comments from Tom Lee over here that says that with more banks and institutions starting to use stable coins and crypto, will they become more profitable and increase multiples? I do think so, because right now, Anthony Noto was saying, a lot of these merchants are actually paying the 2 to 3% fees to Visa. But if they, perhaps adopt a SOFi stablecoin, SOFi can actually, give them some rewards for using the stablecoin because they don't charge the fees, and they can basically share the profit with the customer. And I think this is something that I think people haven't realized how it's being used yet. I think yesterday when I was speaking about stablecoins in particular, one of the things that really got me to understand how stablecoins and how basically the whole Ethereum network in can be used, can actually tokenize a lot of our real world assets into stablecoins, into the Ethereum network, basically. And stablecoins as one of the ways that we can make use of the Ethereum network is really watching some of the podcasts on Bankless that help me understand crypto a little bit better, right? Because like I said, actually crypto, I would say that at least I think outside of the financial YouTube space and FinTweet tweet space, I think a lot of people still see it as a very shady and scammy asset class. And because of that, I do think that adoption will take some time. And I'm glad to have, Tom Lee be the one that is an advocate for this, because I think he is a brilliant communicator and he's a brilliant marketer as well. And I do agree definitely that increased multiples, I think if growth starts to increase, if revenue starts to increase, the increased multiples will definitely come. So yeah, I think I it's good bullish for companies like Robinhood and SOFi as well. I wouldn't claim to be any sort of crypto expert. I think my level of crypto understanding is that, I have every month I invest about $1,000 to $2,000 in Bitcoin and Ethereum, and then every now and then I have a little punt with Solana when I have extra cash. That's about it. That's as far as my crypto expertise go. And then recently I've started to understand a little bit more about the Ethereum network, how it works. Understood a little bit more about the Bybit hack back in February, what that entails, what that means for the Ethereum network. Understand how all these crypto treasuries work. And then I've started to deep dive a little bit more. And that's why I felt comfortable opening a position in BMNR. And I think but I wouldn't claim to be any sort of crypto expert or to be very in tune with how this technology works. I mean, basics, the basics of validation and things like that, those I understand. But in the sense, what does it mean when Apple is going to tokenize their shares on the blockchain? So are they going to be shared? Yeah. So that dynamics, that is something I wouldn't say that I'm super clear on. Clear enough to know that this is a new technology that people are adopting. I'm taking more of an invest and investigate approach with this. SOFi under $30 is the best investment. I mean, look, I'll be very honest. The only time that I will be looking, considering whether or not SOFi should be trimmed is once they hit the $40 range. Then that's when I'll look and see at that point in time, are there other better opportunities out there? But even then, I will not be trimming the entire position, obviously, because I still believe in their multi-decade long story. But that's around in the $40 range. That's when I'll really start to look to see whether there are other better opportunities to make use of the cash. But until then, not planning to sell. What could be? This is not even okay. Could be SOFi's net margin at the end. This is not even something that we have to predict. The company has already told us 20% net margins. That is their aim, and 30% EBITDA. Now, what you need to know is that they have been operating at a higher incremental net income margin. So they already have the capability to do it. They're just choosing on purpose not to do it so that they can, put the money back into growing the business. Okay, remind me, that later on when I go through the valuation, I'll show you how the incremental net margins is calculated, and then you can see for yourself that they are currently already operating at the level that can produce 20% net income margins, and they're just choosing not to do so that they can reinvest into the business. So this is not even something that we need to guess. SOFi management has already told us they are currently proving that they're executing at that level. It's just that in certain quarters, intentionally slowing their profit margin, lowering their profit margins to take that money and reinvest back into the business, right? Okay, so with that, then over here, the second side of this, I'm basically accounting for. Okay, so with banks, I don't look at cash and equivalents and debt because they do lending, right? So what I actually look at is their goodwill ratio. So with SOFi, that's around 20% of equity, so that's not a problem. Capital ratios more than 12%, right? Because regulatory minimum is 10%. And then asset quality in terms of their non-performing loans, less than 1% that have a 90+ day delinquency. Now, I don't look at cash flow for banks. I look at return on tangible equity. This currently stands at 14.4%. As for the sake of comparing SOFi and Hood valuations, okay. I would say that Robinhood right now, because they are a slightly older business than SOFi. I think what I don't realize because people think that SOFi was founded in 2013. These two companies are comparable, but you have to realize that Anthony Noto only came in 2017, 2018. And before that, SOFi had a pretty bad culture under the previous CEO. There were a lot of allegations of inappropriate behavior and things like that. Whereas at that point in time, Vlad was already in charge of Robinhood and they were already starting to build. So I would say that Robinhood is perhaps one step ahead of SOFi in that sense, right? I think for a period after the whole GameStop debacle, sentiment was low, but in terms of building out the company infrastructure and getting his team or the culture in place, they already kind of had a head start at that point in time. So that's what I like to remind people. Robinhood is actually technically older than SOFi if you're comparing CEO to CEO. Yes, Noto is basically the founder of SOFi as we know it. I would consider him basically the founder right now. In this current version of SOFi that we're seeing, it's a bit like Elon Musk and Tesla, right? He wasn't the one that actually founded Tesla, but nobody considers him not the founder of Tesla. I mean, the Tesla that we know today, everybody would attribute all its successes to him rather than the previous management. So that's how I look at it. Robinhood more profitable than SOFi right now. Long term, I would say that they should both end up more or less in the same range. Especially, maybe Robinhood might be a little bit higher because they don't have lending, but again, Robinhood plans to do lending. So whether that will cause their margins to compress, because right now Robinhood is doing all the high margin stuff, right? They haven't started doing lending yet. So we don't know what that would look like, what that product would look like for Robinhood, and how that would affect their margins. So, like I said, this is really an infinite game, which is the whole beauty of investing, why I really, really enjoy it. And yeah, let's see how things turn out. I think both of them are going to make fantastic investments. I am waiting for Robinhood to come to Singapore, and I'm definitely going to open an account there and probably use them as my brokerage of choice. That's the first thing. Now, second thing, also disclaimer, I don't own any Robinhood shares, but I'm very cognizant of that fact, so that I always have this 40 to 50,000 sitting at the side, waiting for a market crash, because I know Robinhood is cyclical. It's going to follow the markets. If we have a bear market, if we have some sort of volatility because of the midterms next year, Robinhood is going to come down, and then that's when I'll be buying heavy. Yeah, because all along I've missed it. I told myself the next sort of little crash or whatever, I'm not going to miss Robinhood. That's the position that I'm looking to build out the fastest and the most over the next part. Coach, does SOFi need to make things happen quicker? So, like I was saying earlier on, I think they both have different cultures. It depends on what you're looking for. I think with Robinhood, a lot of times they're operating a little bit in the group. That's why they have this team of lawyers in Robinhood. If you listen to his interview with Amit, that I believe it's Amit, or was it Tanner? I think they were talking about having a lot of these lawyers look at some of the to handle some of these legal issues. And I think that, yeah, with Robinhood, they are the move fast, break things. So it really depends what kind of model of CEO do you like, right? I'm perfectly fine with the move fast and break things. I mean, I have invested in Hims. Hims move fast, break things, and they obviously play in the gray sometimes. So it's not saying it's a good or bad thing. Yeah, I would have personally no problems. In being, if 40% of my portfolio is in Robinhood instead of SOFi, I wouldn't feel worried. I would feel a little bit more inclined to, sometimes I can get a little bit too relaxed with my management of my own portfolio in terms of looking at the options and like that. If Robinhood was my biggest position instead of SOFi, I would have to be a little bit more intentional because of how volatile they are. That's all. Yeah, but I feel comfortable with both companies. I don't feel like SOFi are too slow. I've mentioned this before. You look at Robinhood, when they release certain things, they are fantastic at releasing it. Oh, gold card, waitlist, and things like that. SOFi, none of that flashiness. They just come out one quarter. Hey guys, loan platform business, boom. And then we see a spike in revenue. And okay, so remind me, I need to show you two things. Someone asked earlier on, Netch asked earlier about net income. I'm going to show you how the net income works. And then for Coach, I'm going to show you the spike in revenue when it comes to their loan platform business. So there's no fanfare around what SOFi is doing. They just do. And then you just see the results, which sometimes makes you think that they're executing slowly, but I think it's two different strategies. You see, with Robinhood and their Gold card, they created this wait list. You look at the wait list, wow, 2 million people on the wait list. How many cards are they launching? They still launch less than SOFi today, right? Because at the pace that they're growing, likely they will overtake SOFi. But I'm just saying that it's not, I wouldn't consider SOFi much slower than Robinhood. I'd say culture is different. The goals are slightly different. The target audience is slightly different. And so it requires a different strategy. Would $50 be justified for middle of 2026 if everything goes well? If we see medium to bet $50, I don't think so. Honestly, if you ask me, I would say that if we get a medium to bet economy, because of all the job revisions, right, and unemployment claims today were 30,000 higher than expected, then I would say that perhaps, $20, $30 range still. Yeah. The thing about being a SOFi investor in a bad economy is that SOFi lends to the super prime borrowers. So because of if there's anything that happens in the economy, if it's a mild recession, then perhaps they won't be as badly affected. But if you're talking about volatility in the market because of uncertainties around the midterms and regulations and things like that, people are worried that some of the regulations will get rolled back. I think one of the things that I'm very aware of is that as excited as people are about the OCC allowing crypto, what happens if they change their mind if and when the administration changes? So that is something that is a risk that you have to price in for SOFi, right? That people are not really thinking about. So I only want a slow moving option. I only want a better performance. That's the hope, I suppose. I think, of course, I think there are a lot of things that SOFi are doing in the background that will suddenly see a spike in their revenue. And it's different from Robinhood. Robinhood's big, like, hey, look, event, crypto event, and then they recently had their Las Vegas, the trading event. These are all the things we're doing now. How incremental are they to Robinhood's revenue and things like that? It's not like they're growing so much faster than SOFi. So in that sense, I wouldn't say that the execution is so much faster. If you're telling me Robinhood is growing 60-70%, SOFi is growing 30%, then I would say that there's a difference in terms of execution. But right now, what you're actually seeing is Robinhood having much better marketing and a lot better in terms of their delivery of their messaging and things like that compared to SOFi. But if you look at the growth rates, fairly similar. So if you ask me who is executing faster, I think they are more or less the same. Big Daddy, I'm from Singapore, but I am going to I'm from Singapore, grew up in Australia for a little bit, and then I am to Canada, US next week. So there's that. SOFi 2640. Wow. Okay. See, so look, I waited. My covered calls later on should yield me better premium. Yeah, and so with all of this, you look at shareholder insider alignment and things like that. At the end of the day, this gets you to SOFi having around a 31 score. So this score is out of 40, and basically I quantify companies based on high quality companies, compounders, or so usually compounders are the mega caps like Nvidia, Google, Amazon, and things like that. And why these companies usually end up with the higher scores is because in terms of the moat category over here, for companies like SOFi, it's very hard for me to give them the maximum score for moat, and that's where a lot of them tends to end up in the high quality space rather than the elite compounder, which is the top tier, right? But 31.4 is quite good. I feel like okay, with Josh Allen, you know what? I have to be very, very honest over here. When SOFi do all these brand partnerships with athletes, I don't follow American football. I'm so sorry. I know there's a huge American audience, but the only football I watch is soccer. Which I may have just pissed the UK people off by saying soccer. I don't know. But yeah, that's the only thing I watch. I am actually hoping to catch the World Cup in the US next year. So, hopefully, I definitely want to visit the SOFi Stadium. My friend has been there, sent me pictures, told me it was fantastic, hoping to go. But Does Josh Allen look good? Yeah, I would say so. They have quite a few celebrity partnerships, right? So I mean, I honestly, yeah. You know what? Everybody tells me he's the second best or best in his position in the NFL, and if so, fantastic. Yeah. All right. You see, you talk about Josh Allen, and then I suddenly forgot. All right. Okay. Valuations. Every year during this period of time, I would say between July and September, there's a little bit of a lull because I play FIFA. And in July to September, it gets a little bit boring. So that's when I've always tried out the different EA Sports games. And maybe I should try out the NFL game. I've tried NBA for sure. I mean, I used to play when I was younger. It was basketball before soccer. It only became soccer perhaps when I was 10, 11 years old. Yeah. All right. So this is the Excel sheet that most of you who have followed the channel for some time should be familiar with when it comes to SOFi. I've been screenshotting from this. Now you can actually see me work on it. So yeah, I believe Madden has the ultimate team component, same as FIFA, which is what I play. Potential dividends or buybacks, Natch, to be very honest, I wouldn't buybacks, I wouldn't say not anytime soon, but dividends, I don't think be doing it anytime soon. At least not part at least between now and 2030, I would put that as a less than 10% chance. For the very simple fact that Anthony Noto told us that look, there's so many aspects of the business that they have still yet to fully grow into, and they would need the money to actually grow into all these other verticals compared to give back and dividend. Could I see them doing share buybacks? Perhaps. I would say that if they get into, if they break into the top 10 financial institutions of the US, which means a $50 billion market cap and above, perhaps we can see them do a small share buyback like what Robinhood is doing, inconsequential, but mostly just to, placate investors. But in terms of dividend, I don't see it, at least between now to 2030, at the very least. I would be surprised. I would be massively, massively shocked if they do that. Oh, tell me about it. Yeah, FIFA was good when I first started playing in the I think era. I think this year was the year that I stopped FIFA the earliest. Yeah, I got bored of it so quickly this year. But you know what? As a DGen, I already pre-ordered 26. So yeah, this is the first. I'm so sorry. I'm distracted now. I will get back into the valuation soon. But this is the first year in the last 12 years that I will not be playing the pre-order. Yeah, because I buy the pre-order, usually I get early access. This is the first year I won't be doing that because I'm going to be in the US and I forgot and I still ordered the pre-order. So yeah. Okay. For those of you, SOFi valuations. Okay, so when it comes closer to their Q3 numbers, I will edit some of these numbers. Sometimes I play around. Please do not take these numbers as a certainty over here. These are numbers I'm playing around with sometimes to take a look at some of the possibilities for SOFi's business. If it's too small, please let me know. What are the chances to close above? Wow, if I knew, it would make me massively rich because if I know that it is going to close above 27.50 tomorrow, I will put in 100K now and then grow that, $1, 100K shares, right? But I'm not. So I really don't know. What are the chances? Do you have calls ending tomorrow or something at 27.50? Chris? I hope for your sake, if you have covered calls at 27.50, Oh, it's hard to say. I hope for your sake it doesn't. Then you can keep your shares, and then we can celebrate $28 next week after the rate cuts. Okay. It has to touch every number 5 times at least. Oh, I mean, I've heard that. I'm not too sure. Is that really true? I mean, honestly, my technical analysis is not the best. I do dabble in it every now and then, but I'm not the best. I tend to focus more on fundamentals. I use technicals to help me decide when to buy. That's about it. Okay, so SOFi Q3, what I have them now is around 12.6 million members, which Anthony Noto has already uh, told us they ended last quarter with close to 12 million. So I wouldn't be surprised to see them break this number around 12.6, which actually is only a 34.5% growth. It's not that much. In terms of their total products, I would expect more or less similar growth, 34% over here. And then that will amount up to a 1.46 products per member. So this is, like I said, you have screenshot. This is exactly how it works, right? Okay, and then what the first thing I need to do is to show you the incremental margins. Now, incremental margins, for those of you who are perhaps newer to this, how incremental margins work is that they look at your revenue growth. Okay. So for instance, you can see over here, this number, $260 million. This is how much the revenue has grown from Q2 2024 all the way to Q2 2025. Now, based on this additional revenue that you have made, right, on a year-over-year basis, how much of this amount of money is actually profit? And so you can see for Netch, I think you were asking me earlier about SOFi's long-term margin. You can see that over here in the last couple of quarters, they have basically been growing their incremental net income margins above 20%. And then you can see in Q4 of last year, they intentionally tanked this all the way down to 9.1%, sorry. And so that is how they end up with, a margin of around 10%, net income margin of around 10%. And I think that is what they're going to do going forward. In the first, 1 to 3 quarters of the year, they are going to operate in a very profitable manner. The reason is so that they can point to that and show investors, hey, 20% is doable. We are already showing it. And then after that, in Q4 or Q3, towards the end of the year, they will tend to, intentionally lower their profit margins just for that 1 quarter to be able to reinvest back into the business for the next year. So I think that seems to be the trend that we are seeing with SOFi. So answering the incremental margin questions, I hope that does it, to say that they can definitely do above 20% net income margins, right? So okay, so with that, let me just hop on to the valuation. Okay, now the one thing I want to point out about valuation, early on, I think a couple weeks back, I made this video where I was telling you guys that, SOFi could possibly save about $36.1 million in terms of their net income, because of, if they choose to pay down some of their revolving debt, which is basically what Anthony Noto said, the capital raise, opportunistic, pay down some of the expensive debt, make acquisitions, right? They could save up to 31.86 million. Now, if they're considering an acquisition, then I doubt that save the entirety of the $31 million. Yeah. And I think another thing to add, I'm not too sure why the market is pumping right now. Inflation numbers came in hot, right? So 2.9% CPI, and then job unemployment claims came in 30,000 more. I actually thought the market would drop because that is actually technically the worst case scenario. You're getting inflation with higher unemployment. But for inflation, I haven't really taken a look at the unemployment numbers in detail. But I just know they had 30,000 more unemployment. But I guess if you look at the inflation numbers in the CPI, I believe the bulk of it is driven by an increase in shelter as well as I think an increase in air ticket prices. So I think if you consider that, I would say that in general, core services and things like that are actually coming down. So I'm actually not too worried about inflation. And if the market sees the same thing, then the Fed, might see the same thing, likely to, keep up with the cutting cycle. I think with the inflation reports, it completely rules out a 50 basis point cut. It's going to be 25 BP, and then let's see from there. Because Paul has already told us, effects of tariffs are going to be broadly transitory, which means that, occurring over a couple of quarters. And I think since he's coming to the end of his term, it doesn't serve him any good to suddenly rock the boat and to basically damage his own legacy. So I think because of that, I'm expecting a 25 BP cut. Market is expecting that too, and I think that is good for a lot of companies that rates start to come down, but not in a very panicked fashion. Perhaps that markets are up. But similarly to what Coach has said, I wouldn't be surprised if there is a sell down tomorrow. People are just taking profits, right? So I wouldn't be surprised to actually see some profit taking before the Fed announces their rate cuts into next week. So I expect next week to be fairly volatile. Okay, so with this, I just want to show you how the loan platform business they will hit the rule of 70 as the norm going forward. Oh, did he say that? I can't remember. I know he said that they do over 50 and they plan to keep maintaining at over 50. I can't remember whether he said 70. Yeah. I know he said above 50 for the last 16 quarters and they continue to do so. Okay. So earlier on, I believe Coach was also asking. So Netch was asking about the net income. I hope I answered that question. Coach was asking about, the growth of SOFi versus Robinhood. I just want to bring attention over here. If you look at this number is the lending and financial services revenue per product. Okay, so what you're seeing over here is that in these 2 quarters, in Q1 and Q2 of 2024, they were generating around $40 of revenue per product in these 2 categories. Now, once they introduced the loan platform business, this jumped up to $46 of revenue per product. And I think this is what I mean by, when Robinhood announced something, there's a lot of marketing, there's a lot of fanfare. Let's hold this event, let's go to France, wear a suit, draw on the chalkboard and things like that, which I love, by the way. But, at the end of the day, the number of credit cards that they launch, pretty similar to what SOFi have. Right? And it's not like SOFi are slowing down. They spent last year managing their credit card portfolio, and now they're re-accelerating again. But you can see the moment that SOFi launches a product, hey guys, we have this loan platform business, boom, accretive to revenue immediately, right? Not just a small bump, it is a significant raise in terms of revenue, a 15% increase in terms of revenue per product over here. So that's the first thing. So you can see in the most recent quarter, this number came in at $47. So my assumption is $48 for the end of the year. I've shown this in a previous video before. And then I'm just showing you the baseline first. Okay. And then at the bottom over here, what we have is the tech platform revenue per account. Now, a lot of people made a big hoo-ha about the Chime leaving. Like I said, not fast over here because Chime might be one of those cost-conscious customers. Now, honestly, I'm in the finance industry. Sometimes I manage people's portfolio, and the people that are let's just put it this way. People that are cost conscious can sometimes be, the worst customers. And I think any one of you running your own business should be able to relate to that. Yeah. So, like I said, if Chime, is cost conscious, then Anthony Noto has already said, if you are cost conscious, perhaps our product is not for you, right? And that is why you can see when Chime went off, the tech revenue per account actually increased, and that has increased from 65 cents in Q1 to 66 cents. So I'm just maintaining this for now. I'm expecting there to be a huge bump since all 10 deals closed, right? I don't think there will. With what the management has told us, I don't think, okay, if they did 65 cents, I don't think they are going to increase to 70 cents next year. That will affect. That's why I say, if you listen to some of the tidbits that Anthony Noto has told us, that will significantly change the valuation going forward, right? However, this year, I'm just being conservative and using this 60 cents range over here. Now, I hope you can see this. I've always wanted to do this, but in the past, I've never really had it up, so it's a bit for me to do. So I just want you to remember, we have this plus $31 million in net income. I'm just going to put it over here so that we'll remember. And then we are focusing here. So what is the first thing we are going to do? Now, Anthony Noto has told us two things. 50% of existing members want crypto or want to custody the crypto with SOFi. Now, 60% of non-members want a licensed national bank. Okay. Now, from here, that tells us a couple of things. My previous assumption is that in Q3 of 2025, which is right now we are already in middle of September. So I would say that I expect a lot of crypto products we launched in for, which was why initially I did this. I had a 1.46 deal in Q3, expecting more of the same, and then in Q4 I expected 1.48 because account for some of the crypto products. But now we have a specific number that Anthony Noto has told us. 50% of existing members want crypto. Now, 50% of existing members is basically 6 million members. Okay. I've said earlier that not all 6 million members will open a SOFi Invest account, because I would expect a bunch of them to already have a SOFi Invest account. Okay. So how many members have a SOFi Plus account? Actually, my assumption, the way I do my assumption is actually quite straightforward. If I have, I would expect, let's say, let me see, 6 million. Yeah, 4 million members. Is that how to do it? Perhaps around half of these people, 3 to 4 million. 3 to 4 million people might not have a SOFi Invest account. Let me see how it makes sense. Okay, so the thought process is like this. This is like solving elementary school math question. If each member has 1.46 million products, okay, so take 6 million by 1.46. That means you assume that out of a 6 million product, if you want to add 6 million products, which, okay. Sorry, I'm doing a math in my head. If I have 6 million members and I assume each one of them opens a SOFi Invest account, which means I would add 6 million new products onto the platform. Am I right? Okay. However, that is not going to be the case because a lot of them would already have a SOFi Invest platform. Now, how many members would have a SOFi Invest platform? They tell us that, at the moment, they're at around 1.46 products per member. So basically, safe to assume around, I would say 50% of this number should already have a SOFi Invest platform, which means out of 6 million members, 3 million members new to SOFi Invest. Assume. Okay? Which means that over Q3 and Q4, there would be a 3 million addition to products above, this 1.46 number. So let's say I add 1.5 million over here. And then okay, so this is how I have added in. If you can see, I've typed in 1,500 over here. I'm not sure if I can zoom in even further for you guys. And this 1,005 is basically representing 1.5 million members. Yeah, okay. All right, so sorry, I've been mumbling because I was doing the math in my head. Let me quickly explain. Anthony Noto has already told us that 50% of existing SOFi members want to custody their cryptocurrencies with SOFi. And then on top of that, 60% of non-members will want a licensed national bank to actually custody their crypto. So with this piece of information, the first one, we know that around 50% of SOFi's existing members, which is around 6 million members, want to custody crypto with them. Now, out of these 6 million members, we are assuming around 3 million members do not have SOFi Invest. Okay, the reason for that is that because there's around 1.46 products per member, which means that some members would likely have 2 products and some members only 1. So I would say that it's about a 50-50 split, which means that if there are 3 million members without a SOFi Invest platform, over the course of the next 2 quarters, we should see an addition of around 3 million members into SOFi Invest, which is an additional 3 million products. So that's the first thing. Now, secondly, 60% of non-members want a licensed national bank. So which means 60%, I'm going to give a discount over here. Let's say 40% of the new members. So basically, you can see the formula at the top. I am taking the total number of SOFi members, multiplying by 1.46 products per member. That is the standard, financial services products. On top of that, we add the 1.5 million SOFi members that want to custody crypto. And they said 60% of new members, right? Or non-members that come onto the platform. So instead of 60%, I'm going to use 40%. So this brings my total product in Q3 to 20.25 million. And in Q4, this brings the total products to around 21 million. Now, if I were to divide this by the total members on the platform, this actually increases the products per member 1.6. And so this is how I'm thinking about it. This is why I said that what Anthony Noto has told us is pretty consequential to how we look at SOFi's valuation. Okay, now what does that do for SOFi's valuation? If I change these two numbers to 1.6, okay, let's see how that is going to affect SOFi's valuation. I move it down, okay, I don't change anything from the tech platform. And what you have is the adjusted revenue over here. Okay, you can see this spikes it up. Again, this is the extremely, extremely bullish scenario, okay? I think that means, our assumption might still be a little bit too aggressive. Okay, then let's use 1 million members. I think this might be a little bit more realistic. So instead of adding 1.5 million products over there, I'm just going to add, and then I'll use 1.5 and then 1.55. Is that correct? I hope it's correct. So, okay, then you can see, the kind of growth rates here are basically more or less in line with what we are expecting, right? Mid 40% growth, end of the year, perhaps even hitting 50% growth. And I think this is really in line with SOFi's guidance. Plus, at the same time, we can actually see the numbers. Now, bear in mind, right now, we are only accounting for growth in crypto, the addition of crypto products back onto their platform. So now the assumption is, with this, we have, basically what we have is we have 1 million new SOFi Invest account open from their existing member base. And then on top of that, there are new cohort of new members that are being added every single quarter. We expect around 40% of them to bring in their crypto assets, which means that they don't just have product relationship with SOFi, they come in with 2 product relationships with SOFi, right? And then on top of this, if you remember, when we were speaking earlier, we were talking about the 31 million that we save based on interest payments. That is going to be accretive to their net income as well. You put that in. Let me see. Okay, if they are planning to do mergers and acquisitions, then I would say that it is safe to assume that only $15 million saved, because they will probably want to use some of that. They want to use some of this money for they would want to use some of this money to basically perform the mergers and acquisitions, and perhaps only save maybe $10 to $15 million in interest payment. Because of that, that takes the earnings per share to around 40 cents by the end of the year. Like I said, this is based on what Anthony Noto has said. This is extremely bullish. I will have to relook at this in more detail to see whether or not this is actually feasible. But in the past, what I have done is I have taken around a 90 times PE, because that was where SOFi was trading at previously. I would say that, you know, if they put up this kind of growth, I wouldn't be opposed to say that by the end of the year, they could be back trading around that range again, right? You can see the PE comps. A lot of these companies were like Hood and SOFi, especially Robinhood. Robinhood was trading at a much higher PE, especially when they just turned profitable. So I believe SOFi is in the trajectory as well. I think for a short period of time, it wouldn't be, you know, because this is not like a long term. I'm assuming 90 PE, you know, 2 years, 3 years, 4 years from now. I'm just expecting it by the end of the year because of market excitement due to their results. That's all. With that, if you do that, you can get a $35.63. And I think this number is just around $4 higher than my previous target of around $31. And so this is basically due to, you know, the addition of crypto back onto their platform, and at the same time, due to the savings that they have incurred from their interest savings. Member growth and product, we have seen exactly, this is exactly what you know, Anthony Noto has guided for, and we hope to actually see this continue into 2026, and perhaps they can hit the third tranche of their payments. But in order for them to do that, they have to hold this amount for 90 days. My personal inkling is that they are able to do $35, second tranche of their payments. Not too sure if they can do the third tranche of their payments, which is $45 by March of next year. They have to do it March of next year so that, right, they can hold it for 90 days, which is until June. So 35, I think it is doable. I've seen how it's doable if they add back crypto using these numbers: 50% of existing members who wants crypto, 60% of non-members wanting crypto, and then out of the 30 million saved from interest payments, you assume half of that goes to mergers and acquisitions, so they only save around $10 to $15 million. You can fill in your assumptions, and then you end up with 40 cents EPS. If you apply a 90 times PE, you know, then I think it is, you know, fairly reasonable that you can see them get to 35. Now, like I said, this 90 times PE was not something I plucked out of thin air. There was a period of time when Robinhood was trading at this PE when they just turned profitable and when they really started to inflect to growth. And I think SOFi is just that one step behind Robinhood, which is using these options. So I hope this has made it very clear. I'm going to turn this entire live stream into a more cohesive video. So for those of you who perhaps join in halfway, you want the more concise breakdown, that's probably going to come out sometime next week. But I think by and large, I am expecting them to reach $35 by end of 2025 if the market, if there's nothing weird happening in the markets. Previously, I was expecting 31, but now I think with crypto, depending on their announcements, okay, let's put it this way. $35 by the time they announce their Q4 results, which means it's January of 2026, but technically it is because I'm saying that, you know, if they are launching their products in Q4, it's very hard to judge on 31st of December. So to me, this $35 is going to likely be where I hope they close after they got Q4 results. Because that's when the market can actually see the impact of the crypto products that they have launched and then price that in. So I would say that, yes, technically, people will ask on 31st December. 31st December, $30, definitely. I think it's quite likely that we can see that if the market continues a slow climb upwards. And then if we get bullish news after the rate cuts with like over the next couple of months, if we get rate cuts now in September next week, and then after that, we start to see inflation, you know, level out 2.8, 2.7, markets will still start to feel a little bit more comfortable. I see this easily at 30 by the end of the year. But this $35, I want to make it very clear, this is going to be what I think will, what I hope will happen based on the crypto products launching in Q4. But to see the impact of the crypto products launching in Q4, we need to wait for their announcement of their Q4 earnings, which is going to be in January of 2026. Big move might come depending on who the 10 new tech clients are for Q1. And yes, definitely. I hope they announce a top 5 bank, Russell. But I think from Anthony Noto's commentary, it doesn't seem like they have signed a deal with a top 5 bank, because during that interview with Goldman Sachs, the Communicopia, he said that he hopes to see some of these big banks make a decision on investments. Now, does that mean he's referring to the other big banks that haven't, and one of the big banks already have? I don't know. I hope so. I think if they announce a top 5 bank, people will start to price in. You can't then at that point in time, people can't deny the reality of the tech platform. It's only a matter of when, not if. Yeah, I agree with Paul, right? If it's a top 5 bank, SOFi would rip hard, because right now we are only pricing in loan platform business plus financial services. Everybody is kind of like, discounting. I mean, even for I'm discounting tech platform in terms of their revenue growth. So you can see over here, I never even project any revenue growth in the tech platform over the next couple of quarters. Yeah. So I think what I want to do is to take a really deeper look to see whether these valuations make sense. I will compile most of this live stream into a shorter video for people who have missed certain parts, jumping in and out of the streams. And I think with that, it's nearly 2 hours. I spoke for so long about SOFi. Oh, before we end, let's take a look at the covered calls on SOFi. They fell a little bit. SOFi is up 3.2 now. Covered calls on SOFi. Let's take a look. 10th October. Okay, it's 58 cents. I mean, it's not fantastic. It's more or less the same. I'm just thinking whether or not I want to do 20 covered calls at $30, right? And then I'll do another 30 covered 20 covered calls at $30 and another 30 at $32. So if they really do get called away, at least it'll be up 31. They said that in the previous, yes, definitely. I do remember that they're in talks. I think they're in the, I think they're in the demo phase or something like that. They did say that, yes. Whether or not that deal has finally closed, I don't know. I would really hope so. I think SOFi has started to try and be better in communicating. Like I said, there are no Robin Hood over there. Paul, 30, 32. I'm looking at because I usually do by fortnightly, but because I'm going to be away until the 4th of October, I'm back in Singapore on the 5th. I'll be in Canada and Alaska over the next 2 to 3 weeks. So I'm not too sure whether or not I am like mentally prepared that if I can't get a good connection, I might not be able to roll them out in time if they move too quickly, which is why I'm very hesitant on this. Like with some of my other positions, I'm a little bit more relaxed. Like I don't mind if Hims get called away, at $60, $70. I'm perfectly fine with how volatile they are. That I can, sell a cash account put at a lower price, or with BMNR, it really doesn't matter. With SOFi, I'm a little bit more cautious because I want to hold this till at least 45 before I really decide moving a larger part of the capital somewhere else. So I'm looking at 30, 32s. I would like to split it by 10th of October. The reason is because I'm back on the 5th. Ideally, if there's connection, if the connection is decent. I mean, you guys are from the US, a lot of you. How is the connection up in Skagway and Yukon? Because I'll be there for a couple of weeks. I know I'll be in Banff. Banff should be perfectly fine. But I'm not too sure how is connection like in Yukon and Skagway. I mean, if you guys are in the US, you have probably been to Canada before. I'm not too sure what kind of reception to expect over there. I am planning to live stream when I'm there as well. So I'll be bringing my phone, my computer, and then we'll see how. And you might see the appearance of the and the mic, because I won't have this mic over there. Yeah, so I'm looking at 32s. October 10th, that would be about 1.9% return, 2% return a month, which is decent. I mean, I usually aim for around, I'm pretty conservative with my covered calls. I tend to aim for around 2% returns per month. Yeah, so I am hoping that I can live stream and roll calls. That's what I'm hoping. I'm just planning for the worst case scenario in my head, that if the connection is bad and SOFi rips and then I can't roll my calls in time. Yeah, that's the only thing I'm worried about. Yeah. If I can live stream, I'm not worried about the cost, because I can definitely, roll them. I'm just worried that if I'm stuck in a place with poor connection, and then yeah. So that's why I'm a little bit more hesitant on this particular one. If I'm in Singapore, it's not a problem. Yep. Okay. So with that, I am done for the night. Depending on my schedule, I might. Okay. If you guys see a notification tomorrow, then I will be on. But yeah, I do want to do one for Hims tomorrow. Yeah, like I said, I think it's not worth risking it. I might just sell a small one, 2,000 covered calls, 2,000 covered calls, 20 covered calls covering 2,000 shares. I think that's about it. I won't do it with such a big position. Yeah, I'll think about it. Anyway, I still have time. All right. Thanks, Paul. Thanks, Russell. And thanks everyone else that's here. 63 of you. That's quite a size for me. Yeah, I'm usually used to 20, 30 people. So 10, 20 people actually, not even 30. 30 only recently. So thanks for staying here with me and listening to me yap over the last 2 hours. And like I said, moving forward, this is something that is going to become a regular occurrence, especially once I'm back from vacation. Even during vacation, I hope that I'll be able to come live a couple of times. And for those of you who are hopping in and out of the streams, especially for streams like this, when I'm covering one company rather than just general market talk, I will be cutting up some of the parts of these streams to be posted as shorter videos. And hopefully, you don't have to rewatch the whole stream just to have an idea of what's happening. Of course, if you like to listen to my voice in the background when you're doing gym, go for it. Not going to stop you, but if you want to save time, I'm going to be cutting up some of these videos, perhaps posting them a couple of days later. Thanks, your mama. Yep. And so with that, we are bringing this night to a close, and I will see you hopefully tomorrow when we are going to talk about Hims. See you.